Hello and welcome to Trading 5 Talents. In today's video, I want to give another update on how the list from this website performed in this very volatile week in the stock market. So once again, if you missed my last video, what I've done is I've looked at some of the top picks from this website, weeklyoptionslist.com, and recorded how they performed over the 1 week period. So basically what this website does, it's a subscription-based website, but once you gain access through this subscription, you get a list of 5 DTE puts throughout the week, and you enter those on Monday, and then you exit them or let them expire by Friday, and you should be back in cash by Saturday. So these are all just weekly expirations of options that you can sell puts on. So this was for the week of February 21st. However, the market was closed on Monday, so the market opened on the 22nd, which was Tuesday, and these were the top picks that I chose. Now, once again, when I pick these, what I'm doing is I am filtering out any earnings-based plays. I'm also not trading any leveraged plays, any volatility recommendations, or any futures-based recommendations. So I'm only looking at ETFs and stocks that fit those criteria. And so these are the order that they were recommended in the list. And also I'm only looking at the top strike of each one. So if, for example, if RSX was listed a couple of times at different strikes, I just chose the top one because they are ranked in terms of overall performance. The thing that I did different in this week is that I didn't set a limit, and I was able to find plays that would fit within my budget. So when I did that for this past week, the top 10 plays were way out of my budget. So what I did is I set a $5,000 limit, so that would put strikes below $50, and that's what you see here. All right, so RSX, YNDX, PLTR, some of these are the same as last week. So I put these in order. The one in yellow is the one that I actually played, and this is what happened. So first of all, the strike prices are given on the website and they are listed here. The closing stock price of last Friday are given here, and then the premiums as of last Friday on these put options is given here. However, the stock opened at these levels and the actual premium was at these levels. So again, the stock opened on Tuesday the 22nd, and you can see, for example, let's look at RSX. Let me zoom in here and go full screen. All right, so for example, at RSX, it opened at a 56% chance of profit. So the premium was $2.20 when it actually closed at 75 cents when it was recommended on the Friday previous. Same thing with YNDX. Chance of profit 53% Tuesday morning. Actual premium was $4 when it closed at $1.80 the previous trading day, which would have been Friday previous. These right here, RSX and YNDX, these are both Russian-based stocks and ETFs. And if you've been following the news, the invasion of Ukraine by Russia really played a major role in the volatility of the stock market this week, especially Russian-based stocks. All right, so let's look at this RSX really quickly. RSX closed Friday at 2302, and then it opened up Tuesday morning at 2027. So it gapped down and actually closed the trading week just yesterday at $15.80. YNDX Friday previous was $44.75, gapped down on Tuesday to $40.52, and closed almost 50% down by yesterday at $20.45. So would I have recommended making these trades? I would not, only because it opened at a 53 to 56% chance of profit. My personal rules are 70% or greater, so I would not have even look to open these stocks if these were recommended. So what happened with these two? Well, they expired below the strike price, so these would have all been assigned. And yes, you would have kept your full credit, but these were losing trades. All right, so let's look at the other ones down here. Let's just highlight this one, and this one right here. And the reason I'm highlighting them is because you can see the actual premium on the opening day, Tuesday, 2 cents, 3 cents. This one was 20 cents, so that was nice. But you can see that I would not have entered these plays because you just don't get as much premium for the amount of money that you're putting up as collateral. However, these were all winning trades. Yes, yes, and yes. All right, to see some things a little bit better, let me just hide some of these columns right here, and we can compare opening and closing price is a lot easier. All right. So we already talked about these two Russian-based stocks. We already talked about these that have very low premiums because they were 90% or higher for their chance of profit. But I wanted to talk about the one that I traded. So opening price is $17.52, closed at $17.48 in terms of the stock price. This one right here, GSX, opened $42.66, closed at $42.68. So if the stock price increases when you're selling puts, obviously you're most likely going to have a winning trade. So that's pretty much a given, right? But you can see here, even though the stock price barely moved throughout the trading week, because of theta decay, you still have a winning trade. So that's the beauty of selling options. The stock goes up, you win. The stock stays the same, you win. But I also wanted to show you another thing here. So for example, this one right here, SoFi. So the stock opened at $10.95, but it went down and closed at $10.60. Yet, this was still a winning trade because your strike price was down at $9.50. So with selling puts, you really get a nice buffer, and many times you get a very profitable and probable chance of winning a trade. So the stock could go up and you win, the stock could stay the same and you win, the stock can even go down a little bit and you would still win. So last week, this strategy using the weekly options list, 7 of 10 winning trades. This past week, 8 of 10 winning trades, the only losers being the two Russian-based stocks. And we would not have even entered those, or at least I would not have considered entering those because of their low chance of profit, because of the gap down, and because of the geopolitical situation in that part of the world. So in my honest assessment, once again, I would still recommend using this service. I think it would be well worth the money if anyone did sign up. So once again, if you go to the weekly options list website, you can become a member and you can get access to this list. So I'll still make a few more videos on the filter set that I'm using with this list to see how the performance tracks over time. And I'll still use my own money to enter at least one of these trades, and I'll be able to report back each week to let you know how it's going. So far, the claims are very accurate. The first week I tested it out, 70%. My investment was back in cash on Saturday in my paper trading. This week, 80%. So if you average the 2 weeks, it would be 75% of the time my options are expiring worthless and I'm back in cash on Saturday. So I do want to make another mention of something that I don't think I mentioned last week, but if we go back 2 weeks ago, to February 14th. So let's look at these losing trades right here. It would have been this one, and this one. So the actual premium of this top one, $2.52. Closing price on Monday, closing price on Tuesday, even closing price on Wednesday, you could have closed out for a really, really good profit. If you just let it go to expiration, that's when you would have been assigned. But if you would have closed it out earlier, you could have made money. Same things with these. The HUT opened at 10 cents. It went all the way down to 3 cents. You could have closed it midweek. And same thing with this one right here, PTON, Peloton. Opened up at 79, but you could have closed it down for 33 or even 65. You could have made profit. So if you let these go to expiration, they would have been losing trades, or you would have been assigned. If you close them early, 50% max profit, 75% max profit, you would have had winners in this. So if you don't let it go to expiration and you just follow the price and exit when you gained most of the profit, then even that 75% chance of winning might actually be increased because you're exiting early and you're just leaving some money on the table, which is perfectly fine because green is green. You're exiting with a profit. So if you have any questions about the wheel strategy or selling options in general, go ahead and leave a comment down below or catch me on Twitter at Trading5Talents. And if you want more updates about not only this service, but about my personal trading using the wheel during these latest volatile months, then go ahead and click on subscribe and turn on the notifications so you can catch all the updates. Until next time, trade wisely and take care.